IndusInd Bank, India's fifth largest private sector lender, was in the news recently and will continue to remain in news. There's a good enough reason for that. In the month of March, the share prices of IndusInd Bank dropped by almost 26% or more following a massive disclosure that happened that there were some accounting discrepancies in the derivatives portfolio. Now, what IndusInd Bank had done was they had taken certain derivative instruments for hedging the foreign exchange risk. Now, they failed to account for losses on these foreign exchange derivative contracts for a good 5 to 7 years. What this resulted in was an overstatement of profits and an understatement of liabilities, which sent a signal in the market that there were major accounting discrepancies in the books of IndusInd Bank. Naturally, when this news came out in the open, there was a lot of investor confidence that got hurt and the share prices of IndusInd Bank dropped significantly. RBI did step into the picture to say that there was nothing wrong and the bank was properly capitalized, but the investor confidence by that point had been completely shaken. What did not help IndusInd Bank's case was the fact that there were multiple governance issues also that had come to the fore. After these issues regarding accounting discrepancies in the derivatives portfolio came to light, RBI asked the Chief Executive Officer and his deputy to step down. However, not having the right set of people to lead the bank in the next stage, they found themselves in a fix. So there were leadership issues, there were governance issues, compounded by the fact that the discrepancies in derivative accounting only spelled doom for the bank. As if this was not enough, the issues only kept on going from bad to worse. The government of Gujarat, as in the Gujarat GST authorities, Gujarat GST department, issued a notice for certain GST discrepancies to the tune of roughly 27 crores. Following that, the GST department in Maharashtra also issued a notice to IndusInd Bank for irregularities, and penalty to the tune of around 30 crores was imposed on IndusInd Bank. While naturally, this doesn't mean that the bank has to pay an amount right away. What it does mean that again, investor confidence in the company has been shaken. The company has been accused of non-compliance on several aspects, and while the company will definitely hire legal help to get out of this matter, still the worst has been done. The investor confidence impaired on one hand on account of the accounting irregularities, the GST penalties, then concerns about leadership, concerns about governance issues in the company. All of these have spelled doom for the company. Yes, the company will revive, the bank will revive. There are, of course, enough assurances from the Reserve Bank of India surrounding that. Yet, the matter does seem to affect the Indian stock markets. And specifically in this time and age, when the stock markets are going through a tumultuous phase, this has only worsened the situation for IndusInd Bank. I think all of us, including you and me, are on the lookout of what next comes for the bank and where do the share prices go from here. Will the bank survive, or is the worst yet to come? All of us will be looking at the bank and other news that will definitely either improve our confidence or impair it even further. To know about more such interesting cases, please subscribe to our YouTube channel.